What's up, millennials? STEM quickly grew into one of my largest positions, and in this video I'm going to explain to you why that is. Today we're going to take a look at the fundamentals of this company, also some long-term revenue targets, and some technical analysis to see where STEM is likely to go in the next couple of weeks and months. So let's do it! Today I did an update for my portfolio, which I shared with my Discord Premium members. By the way, if you want to join that, you can go to nishami.com/member. And I shared, of course, also my buys and sells. For now, I've only bought STEM for a couple of times. And here you can see what my current STEM position is with regards to the other positions in my long-term portfolio, because this is definitely my long-term portfolio. I have just a few swing trades, but those are very small swing trades. And you can see that STEM right now is in position number 4 out of, I believe, 13 or 14 stocks right now that I have in my long-term portfolio. So I'm definitely happy with my current position. If it's going to go lower, if STEM is going to go lower, then I might add some more to my position. But for now, I like it to have it in the 4th position, more or less. And I've been accumulating STEM over the last couple of weeks. As you can see in this TradingView overview, you can see that I started buying STEM at $21.44 just a few weeks ago. And then on the 13th of May, so just 2 weeks ago, more or less, almost 3 weeks ago, I added some more to my position to, basically dollar cost average into a position. I added a little bit more at $18.64 and also at $17.60 because of mainly technical analysis. And of course, I shared those buy alerts with my Discord Premium members. So right now, my average buy-in for STEM is around $20 per share. And right now, well, the stock has already gone up to a little bit more than $25 per share. So of course, that's a pretty solid gain so far. STEM recently also released their Q1 earnings, and we can see that in Q1 of this year, of 2021, they had a revenue of $15.4 million, and that was quite a big difference compared to the same quarter of last year when they did only $4.1 million in revenue. Now you might say, okay, 15 million, that sounds pretty okayish, but you said in a previous video that the revenue for STEM in 2021 was going to be $147 million. So then, if you compare it to that, this is only a relatively low portion, about 10% of the annual revenue for 2021. Well, the thing is, if we go to the investor presentation, which was an updated investor presentation for the month of May, so just a few weeks ago, I believe they released this updated investor presentation. And we can see that right over here, indeed, they had $15.4 million in revenue in Q1 of this year, and they do expect to have still $147 million in revenue for the entire year. And that is mainly because of the seasonality of STEM. We can see that, for example, in Q2 of this year, they expect to have about 5 to 15% of the annual revenue. So again, that is probably going to be a little bit higher compared to the Q1 revenue. I'm kind of guessing that is going to be a little bit less than 20 million, so maybe like 18 million, something like that. Not entirely too sure, of course. And in Q3, they expect to have about 20 to 30% of that annual revenue of 147 million. And then in Q4, it's basically the majority of the revenue that comes in Q4. So that is going to be like 70 to 80 million more or less. So definitely keep that in mind. And don't be scared because the revenue right now is only $15 million and the annual revenue was going to be $147 million in revenue. Now, also keep in mind they have a contracted backlog of $221 million in total. And if you take into account that that is already larger than the revenue for 2021, then you can basically expect that they are going to achieve their target of $147 million for this entire year. So I don't really expect any trouble there. And I actually do expect that we might even see a larger revenue for 2021 than expected. So larger than 147 million, because the Q1 revenue was also higher than expected. It was above the high end of their guidance. So I definitely think they can actually exceed the total revenue for 2021. Now, with the revenue for 2021 at 147 million, and if you take into account that the current market cap of STEM is more or less $3.4 billion, then that would give you a price to sales ratio of about 23, which definitely is not very cheap right now, but do keep in mind STEM is definitely a growth company and they are going to grow a lot over time. So so far the price to sales ratio is about 23 million. Also, keep in mind that the company still has about $500 million in revenue. So if you subtract that from the market cap, then you would be left with a enterprise value, of course, of a little bit less than $3 billion. And that would give you an EV, an enterprise value to sales ratio, of almost 20 more or less. And in this updated investor presentation, STEM also provides us with a few long-term targets with regards to the revenue, the gross margin, and the EBITDA margin. And we can see that especially the gross margin and the EBITDA margin are for the year 2026, and the revenue is for the next 5 years. So basically from 2021 until 2026, so the next 5 years. And they expect to have a compound annual growth rate, a compound, or a CAGR, of course, as they say it, beautiful word, of about 50%. So they are likely going to grow their revenue over time 50% annually, more or less. So that is pretty insane, actually. It would be awesome to see your stock also grow about 50%. So that would be pretty cool. And if we go to another page on this investor presentation, we can see that currently they do have, as I said before, about $500 million in cash on their balance sheet. Do keep in mind, by the way, that this number, the $500 million number in cash on their balance sheet, is not on their current balance sheet just yet, or at least on the balance sheet according to the Q1 earnings, because in Q1 they didn't close the SPAC merger just yet. That was happening in Q2 of this year. So that is why the $500 million is not on the balance sheet just yet according to the Q1 earnings, but it's going to be in the next one in the Q2 earnings. So keep that in mind. And just in general, I'm definitely going to create more videos about STEM in the future, because this is definitely going to be one of my long-term goals. I want to dive deeper into the company. I've already received multiple questions from people during the live streams, for example, or in the comment section. Also, if you have any questions about STEM, let me know in the comment section, then I can dive into those aspects. One of the aspects, for example, probably the most important one, is the competitive advantage that STEM has versus the other companies out there. So that's definitely something I'm going to be researching in the next coming months, probably. So before we dive into the technical analysis, keep in mind that I recently launched a course about TA, about technical analysis for absolute beginners. So if you also want to learn how to read charts like me, then definitely go to nesami.com/TA, read through the page over there to see what kind of benefits you're going to get. And then, yeah, you can apply to get into the course and learn more about technical analysis. So let's first take a look at the trend, at the candlesticks of the STEM chart. Right now we are on a daily chart, so every candlestick is 1 day of price action. Now the move has been pretty strong. I've been gone for a week, so I haven't really looked at the charts, especially not the one of STEM, for the last week or so, the last 1.5 weeks. But the trend is very, very strong right now. I actually didn't expect it to go up this fast. So that is pretty good to see. Now we even broke above the resistance level over here. I thought that there was going to be a little bit more resistance because of this blue box. And this blue box was created by basically this high over here back in December 2020, this low over here in January 2021, now this low, this low, this low, this low. So basically that seemed to be a very big portion of resistance, and I thought that we would get some resistance, but we didn't. We just blasted through it, and we are now up against this level of about $27 more or less, which coincides more or less with the previous top at the end of April of 2021, of course. Now it does look like we are now going to see a little bit of a high over here, so that is going to be a lower high compared to this high over here, but I don't really mind that because I was definitely expecting a lower high to begin with. I even expected a lower high somewhere in the region of this blue box around $23 to $25, but it actually exceeded my targets a little bit. And yeah, let's now see if we are going to create a higher low compared to this low over here, which was created around the level of $16, $17 per share. Now, I am going to share with you a little bit of my thoughts later on in this video at the end of this technical analysis, but let's for now take also a look at the EMAs for now. So we can see first of all, and let's first of all take a look at the 55 EMA, which is going to be this white line over here. We can see that we are now starting to trade above the 55 daily exponential moving average. And this is a line that is frequently used as either support or resistance. You can see that over here, more or less, it was kind of used as resistance. We did quickly go above it for 2 days, but then we quickly went below it again. Then we went down a little bit more, and we used it again as perfect resistance over here. here on the 30th of April 2021. We went back down and now we are back above the 21 EMA, or the 55 EMA, of course. So let's see if we can stay above that 55 EMA. That would definitely be awesome. Also, let's pull up the 8 and the 13 daily exponential moving average, because I do think there's an interesting interplay going on over there. We can see, for example, that the 8 daily exponential moving average, which is this yellow line over here, has crossed the 13 daily exponential moving average to the downside on the 25th of February 2021. And it stayed below that blue line all the way down here. It basically used that blue line, that 13 daily EMA, as a perfect resistance all the way down. But until recently, on the 25th of May, just a few days ago, of course, we had a cross back to the upside. So the 8 daily exponential moving average, the yellow line on this chart, went above the 13 daily exponential moving average. And that seems to be a pretty solid indicator that we might now see a start of an uptrend instead of a downtrend, as we have seen in the last couple of weeks, last couple of months. Let's also take a look at the RSI, which has a pretty positive slope right now. We can see that the RSI is maintaining above the exponential moving average on the RSI, so that is always a pretty good sign. We can also see that the EMA, the white line over here, is back going to the upside again. So that is also a pretty good sign, because we have seen that basically since the end of December, this EMA has started to downtrend all the way down to this level of about 18th of May. And now we seem to be having an uptrend again. So the EMA is going back up, and yeah, definitely has more room to go. So I definitely like that a lot. We can see that the RSI was pretty low over here around the 25 read, which usually is a sign that the RSI could be oversold at that time, could be an interesting buy moment over time. And we can also see that the RSI right now is going to start to decline a little bit more. I would definitely like to see the RSI basing off of this 50 or off this EMA of this exponential moving average. So the blue line, I wouldn't mind seeing this come down to the white line, then use it as support and then continue back to the upside. Let's also take a quick look at the MACD. It is pretty similar if you compare it to the RSI right now. We can see that the MACD, which is this blue line over here, has crossed back above the signal line, which is the orange line, which usually is a pretty good sign. So that seems pretty good. And right now, and just like the RSI, we had been in a downtrend since February 2021. The MACD stayed below the signal line pretty well. It did sometimes go above it, but quickly went back below it. But now it definitely seems to have a different posture. Everything is going to go up pretty exponentially right now, and it would be nice if the MACD could come down to the signal line to also use that as some support and then blast through the upside. So that would be pretty good to see. And then let's also take a look at the last indicator, which is going to be the Bollinger Bands, because right now we do see that we are getting rejected of the upper band of the Bollinger Bands right now. So this cloud, if you will, is the Bollinger Band. And right now we seem to be bouncing off or basically rejecting that upper band. And I wouldn't see a little bit more downside in the next coming days, because I do think if I would have to give you my opinion, my thoughts about the current chart, I would say that in the very short term, in the next couple of days, potentially week and a half or so, we might get a little bit of downside into the blue box of support. Again, that has been a very important level in the last couple of months, all the way back since December 2020. I do think there is a lot of support going on there. Also, if you take a look at the exponential moving average, and let's just bring back all the exponential moving averages just to see what's going on. We can see that all the exponential moving averages are basically within this region too, also within that blue box. So I do think that is going to be a very important level of support. But I wouldn't mind seeing a move slightly lower to more or less between $23, $25 more or less. That could definitely be an interesting one. But I do think that could also be an opportunity. We could potentially see some wicks even lower, maybe even into the $21 or even $20 region. But I kind of think that is going to be bought up pretty quickly, because STEM seems to be moving quite fast right now. So that is more or less in the short term. I do think we could see a little bit more of downside in the short term, but in the longer term, in the next couple of weeks, next couple of months, I would be leaning towards more upside instead. I think that the next resistance is going to be around $31. which is created by this resistance line over here, which was created by this low over here, this low over here, and basically this top over here in the beginning of April. So I do think that could be an interesting target, $31 for the next couple of weeks, next couple of months, of course. Now, do keep in mind that technical analysis, of course, doesn't work in 100% of the cases, but if I would have to give a percentage of likelihood of upside in the next coming weeks, months, then I would say it's about 70% likelihood then that we are going to see that upside in the next couple of weeks, in the next couple of months. So I currently definitely like the setup for technical analysis for STEM. I think that the low might be in right now. I think that $16 was the low for STEM. And I would honestly be surprised if we would start to make lower lows instead. Now, I'm also looking forward to your opinion. Do you think that $16 was the ultimate low, or do you think we're going to retest it or potentially make even lower lows? Let me know in the comments. And with that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye bye!